Election day in Greenland. I don't think there are any pro-United States parties. You would have thought one party would have wanted to get that segment of the vote. Apparently, it's something like 6% want to join the United States over in Greenland. We'll see what happens there. Hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli. And speaking of Greenland, quite an exclusive from Reuters, Trump seeks minerals refining on Pentagon bases to boost U.S. output, sources say. Again, this is an exclusive from Reuters. So you see the concern that Trump has for natural resources. This is March 10th. U.S. President Donald Trump aims to build metals refining facilities on Pentagon military bases as part of his plan to boost domestic production of critical minerals and offset China's control of the sector, two senior administration officials told Reuters. The move is one of several planned for an executive order Trump could sign as soon as Wednesday after he told the U.S. Congress last week he would, quote, take historic action to dramatically expand production of critical minerals and rare earths here in the USA, end quote. As part of the order, the Pentagon would work with other federal agencies to install processing facilities on its bases, according to the sources who were not authorized to publicly discuss the administration's deliberations. Using military bases for processing would underscore the importance Trump is placing on critical minerals for national security. Fighter jets, submarines, bullets, and other weaponry used by the U.S. military are built with minerals processed by Beijing. Trump also plans to name a critical minerals czar, similar to steps previous presidents have taken to coordinate Washington's focus on other areas, according to one of the sources. The plans are under discussion and could change before Trump signs the order, the sources added. Some Trump administration officials were spooked by initial signs that China might restrict critical minerals exports as part of its retaliation for Trump's tariffs or for other reasons, according to a person familiar with their thinking. The U.S. National Security Council did not respond to requests for comment. With the Pentagon controlling about 30 million acres of land, the plan would ensure that there is available land for the refining facilities, avoiding the controversy that sometimes occurs in host local communities. It would also avoid the need to buy land and avoid using land controlled by other federal departments. A plan that prioritizes metals processing rather than an overhaul of U.S. mine permitting could irk U.S. miners but address a long-standing concern from manufacturers that China controls too much of the global metals processing sector. So, as I've been saying here, the real choke point is the processing, not necessarily the production of ore. Finally, it's not clear how Trump's plan for processing facilities on Pentagon bases could work from a regulatory perspective, as the U.S. Clean Air Act and Clean Water Act would still apply to Pentagon bases, and those regulations have hindered private development of processing projects in the past. Trump previously signaled a willingness for alternative uses of lands controlled by Washington. As a presidential candidate, he pledged to open up portions of federal land for large-scale housing construction with zones that would be, quote, ultra-low tax and ultra-low regulation, end quote. Trump does not plan in the order to establish a U.S. critical minerals stockpile that would mimic the Strategic Petroleum Reserve, the sources said, a step that some in the administration and mining industry had sought. China stockpiles some critical minerals, including cobalt, and the U.S. government last year considered stockpiling the metal, which is used in missiles, aerospace parts, magnets for communication, and radar and guidance systems. So another head-turning headline from the Trump administration. Metals processing on Pentagon bases. Welcome to 2025. The cobalt export ban out of the Congo continues to draw headlines here, and we got a new one from Reuters via mining.com yesterday. Cobalt price soars on supply fears after Congo export ban. I'll be super blunt about it. The headline seems slightly overwritten. I mean, if they have too much cobalt in the market, and they're actually having to stop exports because the market has been flooded primarily by China's CMOC. Is there really supply fears? I mean, is this really a panic when we have too much of it? So maybe in the short term, that is the situation. Let's take a closer look. Cobalt prices soared on Monday as concerns over supplies mounted after Eurasian Resource Group declared force majeure on deliveries because of a Democratic Republic of Congo ban on exports of the battery material. Cobalt trading on China's Wuxi stainless steel exchange was paused after prices jumped nearly 12% to about 240 yuan per kilogram, the highest since October. European prices also climbed, with standard-grade cobalt warehoused in Rotterdam, rising to $12.25 per pound on March 7th, up from $10.80 on March 4th, and $9.95 on February 24th, data from pricing information agency Fast Market showed. So we're up about, let's call it 20% in a couple of weeks. Last month, Congo's government suspended cobalt exports for 4 months to rein in oversupply and large surpluses, which had sent prices to 9-year lows around $10 a pound, or $22,000 a metric ton. And scrolling down a bit, we have a quote from a trader, quote, "The Chinese are not selling metal. There is a growing realization that Congo means business," end quote, one of the traders said on condition of anonymity because he is not authorized to speak to the media. Quote, "They are holding on to what they have. ERG's force majeure has made them sit up and take notice," end quote. So I think China, as I've been mentioning here the last few weeks, I think China has a bit of an optics problem because they have China-owned CMOC based out of the DRC, flooding the market with cobalt, and then you have China stockpiling it, announcing last year a stockpiling program, which sounded like it amounted to, I did a little bit of, back of the napkin math on it. It looks like it's about 10% of the global supply of cobalt they want to stockpile. So not an insignificant amount. So whether it's real or not, I would argue they have a bit of a conflict of interest optics problem because the China-owned miner, CMOC in the DRC, is flooding the market, and then their China is stockpiling it on the other side. So from the DRC government perspective, the DRC is probably asking themselves, what do we do about this? And it's often mined with copper too, which complicates the issue because maybe CMOC is just mining a lot of copper, and with that comes cobalt. And then perhaps China is just, taking advantage of low prices to stockpile, as they should, one could argue. And so what does the government do? They create an export ban on cobalt only, which to a certain degree seems like perhaps the most diplomatic thing they can do if they're concerned that their cobalt is, being sold for rock bottom prices here. An understandable response, I would argue, perhaps an unconfrontational approach to China in the sense that Felix Tshisekedi, the president of the DRC, it was only a year and a half, 2 years ago that China rolled out the red carpet for him when he wanted to renegotiate the deal that the DRC had made with China over minerals. Kind of a bit of a grand bargain, so to speak, between the two countries. And so how do they approach this then? So that's one way. Another way they're approaching it is this reaching out to the United States, because, of course, in the eastern DRC, they have a pretty serious problem with the M23 rebels, who seem to be very well armed. We've been hearing reports of drones, and where the DRC's military doesn't really want to fight, which again makes it seem like it's maybe not an even fight, which again makes one wonder, is that because of the weapons that are at work here, where the soldiers maybe feel like they have no hope? And there's even court-martialing of some of these soldiers for not, facing the enemy, etc. So within all that, the DRC, 2 weeks ago, then was doing an interview with the New York Times, the president of the DRC, Felix Tshisekedi, and was basically musing out loud that they would be interested in a, minerals deal almost akin to what was being proposed in Ukraine in order to help take care of the security issues that the DRC is having in the eastern side of the country. So it's quite interesting. A lot of narratives are kind of colliding here. In the DRC, you have the China versus the US in Africa. You have the security situation between the M23, who are thought to be funded by Rwanda, and then you have Europe, who has signed the Memorandum of Understanding with Rwanda on minerals a little over a year ago, but then it sounds like the UK and France are backing away from supporting Rwanda. So there's a lot of kind of moving parts here. And then, of course, the DRC was suing Apple. Another, narrative here that is colliding in here. Now, just last week, in case you missed it, the lawsuit that the DRC's lawyers had made against Apple in France and Belgium was dismissed, although they did have the opportunity to appeal, and they were going to, something like 30 days. So we may not have heard the end of that either. So all to say, there does seem to be a temporary issue with cobalt, as we see in this next story. The London Metal Exchange temporarily suspends lending rules for the cobalt contract. And this is Reuters via mining.com, and I just want to highlight something in, say, the 7th or 8th paragraph here. LME data, which is delayed, shows total inventories of 126 metric tons, but all of it either canceled or earmarked for delivery out of warehouses, leaving no available stocks. So there is a temporary hiccup here with cobalt in the sense that there are no stocks on the LME, according to this story. So that is quite interesting as well. Now, if we look at this reaching out by Congo to the U.S., there was a story in the FT that a staff writer here at mining.com reported on, and here's the headline: US-Congo in exploratory talks over minerals deal, according to the Financial Times. And again, this staff writer at mining.com. The United States is holding exploratory talks with Democratic Republic of Congo over a deal that would give it access to the African nation's critical minerals in exchange for military support, the Financial Times reported late on Friday. The Congolese government first brought up the possible deal 2 weeks ago after President Félix Tshisekedi gave an interview to the New York Times, stating that the Trump administration has shown interest in its vast wealth of minerals. One of Africa's most richly endowed countries, the DRC is the world's largest producer of cobalt, a critical mineral used in many industrial applications, including electric vehicle batteries, accounting for over 70% of global production. It also holds significant reserves of gold, copper, tin, lithium, and tantalum. However, many of the mineral-rich areas in eastern DRC are now under the control of the M23 rebel group, who, according to the United Nations experts, has been backed by neighboring Rwanda and smuggling Congo's minerals through the border. While still in the early stages, any potential minerals deal with the U.S. would likely equip Congo with military reinforcements to put an end to the conflict. In a letter to U.S. Secretary of State Marco Rubio, Congolese Senator Pierre Kandi Kalambayi has proposed granting American companies mining rights in exchange for U.S. support in training and equipping the Congolese armed forces, the Financial Times reported. Quote, "There is a desire for us to diversify our partners," end quote, Congolese government spokesman Patrick Muyaya said last week, adding there were, quote, "daily exchanges between Congo and the U.S." Now, what's interesting about this is I think it's back to this optics problem. The DRC, rightly or wrongly, accurately or not, probably feels like it's being used by China in order to flood the market for cobalt that China basically owns the market of. And you haven't heard a ton about China, helping out Congo militarily in the eastern side of the country either. So perhaps there's also a frustration there. So it's quite interesting. Let's continue. The U.S. also sees this as an opportunity to counter China's dominance in the African nation's mining sector. And here's a quote from a State Department spokesperson who told the Financial Times, quote, "The DRC has a significant share of the world's most important minerals needed for advanced technologies. The United States is open to discussing partnerships in this sector that align with the America First program of the Trump administration." End quote. On Sunday, the State Department confirmed to Reuters its interest in the critical minerals deal, noting that Congo holds a, quote, "significant share of the world's critical minerals required for advanced technologies," end quote. Meanwhile, it came out that MMG, which is a Chinese state-controlled mining company, in December mothballed a cobalt processing plant in the DRC, only 15 months after opening it due to the slump in prices. And so I wonder if that also irked the DRC, because finally they have a processing plant where they could, start to get more value add from their cobalt, and then that was canceled by MMG. And I think this just came out because the story is March 6, 2025, but it sounds like it came out in a Q4 report. MMG said it suspended operations at its new facility at the Kinsevere mine in December 2024 due to, quote, "unfavorable cobalt market conditions," end quote. The government of Congo, which dominates production of the material used in electric vehicles, introduced a surprise 4-month export ban last week to rein in oversupply and assert more control over the metal's price. And this was also interesting if you scroll down the article. Prices for cobalt hydroxide, the main product exported from Congo, have risen by a third following the ban, hitting $7.60 a pound on March 5th, according to Fast Markets. Now, the price of processed cobalt is about $11. So it's already a flooded market. The refined price is already, dramatically lower. If we look at the, price of cobalt that we've been following here for a few years, it was as high as $37.40 for the refined cobalt. And now it's at, as of today, it's at $11.90. And they're getting $7.60 for it because it's not even processed. So it's tempting to think, as they say, the need for diversifying their partners, one senses a frustration with China. Let's just put it that way, which is quite interesting. Now, continuing on Congo, moving eastward, we also had movement on the UN Security Council, which is also interesting. This is Deutsche Welle, DW.com. United Nations Security Council calls on Rwandan troops to leave. In a unanimous resolution, the Security Council condemned the M23 advances with the support of the Rwandan Defense Forces. U.S. Secretary of State Marco Rubio has also called for a ceasefire in the region. Now, if my memory serves, there was not a unanimous resolution from the Security Council the last we heard. But now, on Friday, it sounds like they did get one. And I believe the holdouts last time was the US and the UK. Let's take a closer look here. So this is DW.com. The United Nations Security Council on Friday urged the Rwandan military to withdraw its support for the M23 rebel group in the eastern DRC and pull out its soldiers from Congolese territory, quote, without preconditions, end quote. Large patches of the Eastern Democratic Republic of Congo are now under the control of the M23 rebel group, with the support of some 4,000 Rwandan soldiers, according to UN experts. On Friday, the UN Security Council unanimously adopted a resolution saying it, quote, strongly condemns the ongoing offensive and advances of the M23 in North Kivu and South Kivu with the support of the Rwandan Defense Forces, end quote. It also called on the Rwanda Defense Forces to, quote, cease support to the M23 and immediately withdraw from DRC territory without preconditions, end quote. Earlier, the Security Council had called for an immediate and unconditional ceasefire by all parties, but on Friday, all countries, including the 3 African members, held Kigali responsible for the first time. In a phone conversation with Kenya's President William Ruto on Friday, U.S. Secretary of State Marco Rubio also called for an immediate ceasefire. Rwanda, however, denies the allegations that it supports the M23 rebels with armed troops. And there were reports that the M23 had drones, which is why they were kind of scoring win after win, and why the Congolese soldiers were not exactly eager to fight. As it says here, quote, almost no Congolese soldiers are fighting, end quote, an observer said Friday, adding that the, quote, only ones still fighting are the Wazalendo, end quote, pro-Kinshasa militia. And it continues, since losing Bukavu to the rebels, the Congolese armed forces have barely put up a fight, instead retreating. So, again, it does seem to be a bit of a weapons issue here. And finally on this, the DRC offers $5 million bounty for M23 rebel leaders. And this is according to Voice of Nigeria. There does seem to be a renewed attempt here by bringing the Americans on board and by putting the bounty on the M23 to deal with this problem. Continuing on, so the Libito corridor, we were discussing in a previous show how the Libito corridor, which is basically designed to take metals out of the Copper Belt, Zambia, and the DRC to Angola, to Libito, on the western side of Africa, how that had been compromised by U.S. aid funding cuts, but it looks like the EU has pledged to continue developing the Libito corridor. As it says here, the government of Zambia is happy with the continued EU support towards different development programs, including the development of the Libito corridor. Speaking with EU ambassador to Zambia and COMESA, Carolina Stasiak, who paid a courtesy visit, Transport and Logistics Minister Frank Tayali said that while other countries' envelopes have dropped, the EU has maintained its support for Zambia. So that is also interesting. And just finally here, some developments on Korea Zinc, which is the world's largest zinc smelter, but they also create a lot of strategic metals, and which is seen as one of the most important, metals processing entities outside of China. And there has been basically a corporate battle for control of it in the last few months. We have an update. This is Bloomberg. Korea Zinc shares surged on Monday after a Seoul court nullified key decisions from the company's January investor meeting, including board appointments, and reignited a months-long battle for control. Shares in the world's biggest refiner of zinc jumped as much as 18%, the most since December, after the court accepted an injunction from top shareholder Youngpung Corporation, effectively removing 7 directors nominated by Korea Zinc. The court found that a last-minute move by Korea Zinc that restricted Youngpung from voting was unfair. MBK Partners, which is private equity and has partnered with Youngpung, they have put out a press release on Business Wire here. South Korean court has halted key resolutions from Korea Zinc's recent extraordinary general meeting, paving the way for MBK Partners and Youngpung to secure a majority of the company's board. The ruling issued on March 7th by the Seoul Central District Court effectively suspends most decisions made at Korea Zinc's extraordinary general meeting in January, significantly weakening Chairman Choi Yun-byam's control. As a result, MBK Partners and Youngpung, Korea Zinc's largest shareholder, are now positioned to outnumber Chairman Choi's camp on the board thanks to the cumulative voting system. The system allows MBK Partners and Youngpung to elect more directors with each successive shareholder meeting, tilting the balance of power in their favor. So it sounds like the momentum has shifted towards Youngpung and the MBK Partners over at Korea Zinc. So it's going to be interesting to see. I mean, the big concern is that the private equity MBK is going to hollow out, ultimately, that very strategic asset over in South Korea from a metals processing perspective. So interesting developments there. Coming up, I'm very pleased to welcome Jeffrey Christian, managing partner at CPM Group, to the show. We're going to go in depth on Fort Knox, which, believe it or not, Jeffrey Christian has visited. And I can't say I'm surprised there. So we're going to discuss this big Fort Knox issue that has come up recently in the auditing of the gold there. Is it there? This whole story. And we're also going to discuss this interesting story that we saw in late January with this gold that was being transferred from London to the United States. I get Jeff's view on what happened there, and it's actually fascinating. I haven't heard it anywhere, actually, and it's probably what happened. So a wonderful interview, as usual, with Jeffrey Christian, managing partner at CPM Group. Also for this week's Spotlight, we have Alamos Gold President and CEO John McCluskey, who discusses the very impressive moves that the company has been making over the past couple of decades here. And you're going to hear all about all of the impressive things that are happening at the company. And so that's coming up in this week's Spotlight. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner, and you can find us on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, Soundcloud, and Apple Podcasts. And with that, let's turn to John McCluskey, President and CEO of Alamos Gold, for this week's Spotlight. Joining us today, I'm very pleased to welcome to the Northern Miner podcast, John McCluskey, President and CEO of Alamos Gold. John, welcome to the show.
Thank you very much. Pleased to be with you.
It's great to have you, John. Alamos Gold is a notable name here in Canadian mining and in gold mining. For those that are unfamiliar with Alamos Gold, could you tell us a little bit about the company and what you guys are up to?
Yeah, we started as a small exploration company in the early 2000s. And at that time, we acquired an option to purchase the Mulatos project from Placer Dome. It was a major at the time. And ultimately, we developed that mine, brought it into production. And by now, we've produced over 3 million ounces from Mulatos. And that was really the foundation asset of the company. But starting in about 2015, we turned our attention to growing as a company and started to make acquisitions. We acquired the Young-Davidson mine in Northern Ontario, up near Kirkland Lake, Ontario. That's a mine that produces roughly 200,000 ounces a year and generates over 100 million in free cash flow annually for us. We subsequently acquired the Lynn Lake project in northern Manitoba. It was a development project, sort of in an advanced exploration state. We've subsequently drilled off 3 million ounces, and we've permitted it, and we're just about to go into construction there. And then we acquired the producing Island Gold Mine, and we did that in 2017. And since we acquired it, we've drilled it aggressively and turned it into a world-class asset. It has 7 million ounces, net of the million ounces that we've mined there. And it's undergoing a big investment whereby we'll sink a shaft and ultimately turn it into a 300,000 ounce a year producer from underground. We've subsequently acquired a mine right next door to it called Magino. It's a large open pit project, and that is now a producer. And we're effectively in the process of integrating those two operations into a camp that we envision growing to about 600,000 ounces of annualized production.
Okay, excellent. So Island Gold and Young-Davidson are both in Canada, which I imagine is good from a jurisdiction point of view. I suppose that makes it attractive. How have things changed since the acquisitions, John? I mean, the gold price isn't quite where it was, say, in 2017. In a sense, how have things changed for you at the company in the meantime?
If you look at the track record of the company, we acquired the Mulatos project when gold was under $300 an ounce, and no one was interested in gold. It was as counter-cyclical a move as you'll ever see. We subsequently grew that asset and turned into a highly profitable mine. And by the time we were ready to start acquisitions in 2015, we had nearly $400 million in retained earnings. And we were in a great position to start making acquisitions. If you look at what we've done in the acquisitions in the mid-teens, we made 3 back-to-back acquisitions between 2015 and 2017. That was after the gold had peaked in 2011 at $1,900 an ounce. It pulled all the way back to roughly $1,100 an ounce, and that's where we started making acquisitions. So between $1,100 and $1,300 an ounce, that's when we picked up Young-Davidson, Lynn Lake, and then Island Gold. Subsequent to that, gold prices turned around and it's run to $2,900 an ounce. So if you looked at any gold chart, it's quite clear that we're very good at making acquisitions at the bottom of the chart.
Okay, excellent. So you have 3 producing mines then, and so I imagine, the company must be doing well.
Well, we're doing very well. We started with one operation that generated about 150,000 ounces a year. After we added the second operation, it took us initially to just under 400,000 ounces a year. Then we expanded Young-Davidson to the point where we were generating close to 500,000 ounces a year. Now we've got Young-Davidson, Island Gold, and so on, and we're going to generate in the range of 600,000 ounces a year in 2025. And by the time we finished our expansions at Island Gold and the addition of Lynn Lake and so forth, we're on our way to 900,000 ounces a year and should get there by about 2028.
Okay, amazing. So you're starting, hopefully by the end of the decade, then you'll approach the 1 million ounces. I mean, that's pretty amazing. Okay, so how do you see things playing out then? I mean, you've done a lot of acquisitions. Is that the plan, is to continue acquiring, or is it to more kind of consolidate your gains, really, maybe drill out Island Gold and Young-Davidson and Mulatos? How do you see things playing out going forward?
Well, we've done that turn with every asset we've acquired. So when we acquired Island Gold, for example, it had 700,000 ounces of reserves, and mining at a rate of roughly 100,000 ounces a year, it would have been over in 7 years' time. Our whole purpose for acquiring it is we saw so much more potential there than the market did at that time, and we've been proven correct. We've invested over $20 million a year in exploration since we acquired Island Gold, and over that period of time, we've increased reserves and resources to just under 7 million ounces. And we envision it growing in excess of 10. So we've had tremendous success there with the drill bit. Even going back to the beginning with Mulatos, when we acquired it, it had about a 6-year mine life. By now, we've been mining it. This is its 20th year of production. And we envision, based on reserves and resources, another minimum of 10 years ahead. My feeling is sometime between now and the next 5 years, we're probably going to add another 10 years of production to Mulatos. So we've been very astute in our acquisitions, not just picking up discrete mines, but picking up mining districts and acquiring lots and lots of ground around them. So Island Gold, when we acquired it, there was maybe 7,000 hectares. Well, by now we control something in a range of 60,000 hectares, effectively the whole Michipicoten gold belt. We managed to secure that through a series of acquisitions of public companies and private companies. And that gives us the scope to continue to grow those assets over time. So we don't really need to do more acquisitions in order to, replace reserves or grow reserves. We've got a great deal of upside just with what we own now. And through further expansions, that is our goal, to exceed 1 million ounces of gold a year by the end of the 2020s. But more importantly, to be able to sustain that rate of production for at least 20 years in the future. And that's always been our way of operating, not just to acquire things that give us a quick run, but acquire things that allow us to sustain a business for a very, very long period of time.
Okay, excellent. And is the company and these properties, are they pretty much gold specific, shall we say? Are there other metals involved?
So our focus is on gold, and our operations will produce some byproduct silver. For example, at Mulatos, for every ounce of gold we produce 3 or 4 ounces of silver. But in terms of value, with gold at $2,900 an ounce, it's silver at $35 an ounce. All the value is in the gold. But other than the byproduct silver, our main focus is the gold itself.
And so as we start to wrap up here, John, what do investors have to look forward to here? In a sense, why should people invest in Alamos Gold?
That's a great question, Adrian, because there's a lot of alternatives out there. There's equities, there's the commodity itself. Why wouldn't you just buy the metal? Why wouldn't you buy an ETF? The reason I think we make such a great investment is if you look at our historical finding cost per ounce of gold, we've added, in the last 6 years, we've added 5 million ounces at a finding cost of roughly $30 per ounce. So we're not just growing reserves, we're growing them in a very, very efficient way. We produce tremendous cash flow, which allows us to essentially finance all our exploration and all of our expansion through our own cash flow. We don't need to go out and borrow money, or we don't need to go out and raise money in order to finance this growth. So we can we're going to be just over 600,000 ounces this year. We can get to 1 million ounces of production, low cost production, by the end of the 2020s, essentially through fully financed, internally financed organic growth. And I think that makes us very unique as a gold equity. And I think it also makes us a better alternative to buying the metal or buying an ETF.
John McCluskey, President and CEO of Alamos Gold, thank you for joining us and sharing all that you're working on at Island Gold District, Young-Davidson, Mulatos, Lynn Lake, and more.
It's been my pleasure. Thank you, Adrian.
And thank you once again to Alamos Gold for sponsoring this week's episode of the Northern Miner Podcast. If you want to learn more, go to alamosgold.com. Turning to the website, very interesting story here on the tariffs. U.S. steel CEOs urge Trump to resist metal tariff exemptions. This is Bloomberg News via mining.com. The CEOs of the 3 largest steelmakers are urging U.S. President Donald Trump to resist giving any tariff exemptions on imports of the alloy. So this is quite interesting when we contrast it with the American Aluminum Association, which wants aluminum exempted from the tariffs. The steel CEOs, they're insisting that President Trump not give any exemptions. 9 U.S. steel industry executives sent a letter to Trump on March 7th, just days before the U.S. is expected to implement a 25% tariff on all steel imports. And yes, I believe that's tomorrow, Wednesday, March 12th. The letter said prior exemptions given to nations allowed for increased import volumes that damped the original impact of Trump's duties during his first administration. The CEOs, which include Nucor Corporation's Leon Topalian, United States Steel Corporation's David Burritt, and Cleveland Cliffs' Lourenco Goncalves, argued that avoiding exemptions was a matter of national security. Quote, millions of tons of product-specific exclusions were granted, even for products readily available from domestic suppliers. The result was a weakened U.S. steel industry exposed again to the global steel oversupply crisis, end quote, the letter said. Quote, we urge you to resist any requests for exemptions or exclusions and to continue standing strong on behalf of American steel, end quote. The letter comes as companies and countries have been lobbying the White House to exempt key trading allies from duties, arguing such levies would raise prices on U.S. consumers. The U.S. steel industry is coming off its worst year since Trump's first term in office, as lackluster construction demand, inflation, and high borrowing costs created a triple whammy on earnings. Imports rose in 2024, but remained below 2021 and 2022 levels, according to Commerce Department data. The looming threat of tariffs has caused U.S. prices to surge in recent weeks, making it more than 20% more expensive than imported steel. As recently as January, a ton of steel was selling for less than $700 a ton, but by the end of February, domestic producers were said to be quoting customers' prices as high as $1,000, levels not seen since the beginning of last year. So interesting. So imported steel was cheaper. I guess that's the whole point of the tariff, isn't it? To prevent imported steel from being cheaper. Very interesting story there. So continuing on the steel front, ArcelorMittal, of course, European steel, to temporarily halt production at its two main French plants. This is Reuters via mining.com. ArcelorMittal on Monday announced a more than €270 million or $275 million maintenance program that would include the halt of activities at its plants in Dunkirk and Fos-sur-Mer, France, for several months. From April 15th, the world's second-largest steelmaker will shut down operations for 90 days at its main blast furnace in Dunkirk, the largest in Europe, where it has already delayed planned green investments. The cost of the maintenance in Dunkirk will be €254 million, while €18 million will be allocated for those in Fos-sur-Mer, the company said. Continuing on the tariffs front, Trump's tariffs drive U.S. physical market aluminum premiums to record high. This is Reuters via mining.com. Price premiums for aluminum on the physical market in the United States have surged to a record high due to looming threats of tariffs on imports of the metal used in transport, construction, and packaging industries. U.S. President Donald Trump is planning to restore 25% tariffs on aluminum imports from March 12th. Tariffs on most imports from Mexico and Canada took effect on Tuesday. Buyers on the physical market usually pay the London Metal Exchange benchmark aluminum price plus a premium, which typically covers taxes, transport, and handling costs. Quote, ultimately, the U.S. is a net importer of aluminum. Producers will not want to pay the tariff. They'll try to pass on as much as they can to consumers, end quote, said Bank of America analyst Michael Widmer. Quote, this leaves you with a market where aluminum units will potentially be diverted away from the United States, end quote. And that is exactly actually what we're going to see here, as we see from this following story by Reuters at PDAC. Teck plans to sell to Asia to avoid U.S. tariffs. Canadian miner Teck has been developing plans to sell zinc to Asia instead of the U.S. to circumvent tariffs from President Donald Trump's administration on Canadian imports, CEO Jonathan Price said on Tuesday. Teck, which sells most of its refined zinc to the U.S., has been working on a contingency plan for months, Price told the PDAC Mining Industry Conference in Toronto. We have been reserving warehouse capacity, looking to reserve space in ports to export the metals to Asia, end quote, Price said. We'll find buyers and prices will adjust, end quote. And we have another tariff story, this time on copper. U.S. tariff threat brings boom time for physical copper traders. This is a column by Reuters. And just a couple of excerpts here. While financial markets gyrate to the uncertain beat of U.S. President Donald Trump's unpredictable tariffs, physical copper traders are reaping the rewards of the turmoil. The threat of U.S. tariffs on copper imports has opened up a once-in-a-lifetime opportunity for those in the business of shifting physical metal around the globe. The CME copper contract is now trading at a significant premium to the London Metal Exchange contract, opening a massive import arbitrage opportunity. There is an ongoing scramble to ship physical copper to the United States to beat the tariff deadline with knock-on impacts on global trade patterns. So, interesting to see all of the impact these tariffs are putting on metals markets. Another story here, this is Bloomberg News. Copper prices surge as Trump signals 25% tariff on imports. Copper prices jumped by more than 5% in New York, leaping further above other global benchmarks as U.S. President Donald Trump suggested imports of the metal could be subject to a 25% tariff. Trump's comments made in a speech to Congress Tuesday sparked a frenetic rally in COMEX copper prices in Asian hours as traders reacted to the possibility that levies could be larger than expected and come much sooner. Last week, Trump announced the Commerce Department would undertake a sweeping investigation that may lead to copper tariffs on national security grounds. That triggered a sharp rally in COMEX prices, widening the gap with equivalent prices in London and Shanghai. And we have a quote from Ollie Hansen, head of commodity strategy at Saxo Bank, who said, quote, "A 25% tariff was clearly not what the market was expecting before those comments, and now traders are scrambling to price in the correct level, whatever that might end up being. The disruption to global trade flows is very real." And continuing on, major copper producer Peru readies U.S. delegation amid tariff threat. This is Bloomberg News via mining.com. So the whole world is struggling to deal with tariffs. And this is Bloomberg News via mining.com. Peru is planning to send a delegation to meet with U.S. officials after the Trump administration announced plans to introduce copper tariffs that may affect the South American nation's biggest export product. Quote, "The rules of the game are changing quickly under the new North American administration," end quote. Energy and Mines Minister Jorge Montero told reporters in Lima on Monday. Peru is looking to, quote, "avoid being hurt by certain restrictive measures that will be implemented due to U.S. interests," end quote. World number 3 copper supplier Peru sends some of its metal to the United States, although the majority is shipped in semi-processed form to smelters in China. Top U.S. copper producer Freeport-McMoRan owns Cerro Verde, one of Peru's largest mines. Quote, "Peru is a good strategic ally for the U.S. on business issues, but not just for the U.S., Montero said. Quote, "Peru is a non-aligned country, one that's open to investments and business with everyone. We are not committed to a particular geopolitical vision," end quote. Another story, Freeport sees $500 million annual boost if Trump declares copper as critical. This is Reuters via mining.com. Freeport-McMoRan hopes U.S. President Donald Trump declares copper a critical mineral, a move that would unlock tax credits needed to boost American production of the red metal and offset global rivals, CEO Kathleen Quirk said on Monday. Trump told the U.S. Congress last week he would, quote, "take historic action to dramatically expand production of critical minerals," end quote, although he has yet to provide details. Copper is used widely across the global economy in power generation, electronics, and construction. And here's a quote from Kathleen Quirk, quote, "Having the incentives and clarity around those would be a big plus for the domestic copper industry. People are understanding more what copper is used for and its importance in our economy. It's just a matter of time before it's classified as a critical mineral," end quote. She continues, quote, "We're not looking for handouts, but if the government is trying to incentivize domestic production, it's important to recognize that the U.S. doesn't have the same grades that we have internationally," end quote. And finally, she said, quote, "We're not out there advocating one way or the other. We're wanting to make sure that there's education so that there's informed decisions about all of this," end quote. And circling back to our opening discussion on the Congo, the U.S. Department said on Sunday it was open to exploring critical minerals partnerships with the DRC, which is rich in cobalt, lithium, and other minerals. Freeport sold its DRC operations in 2016, but is eyeing a return, Quirk said. Quote, "We would be interested in going back to the DRC for the right opportunity," end quote, said Quirk, adding that would mean Freeport would be the operator of any mine. Quirk declined to comment when asked if Freeport is in negotiations with the DRC government. So moving past copper here, metal for bullets risks bigger shortage after near 300% surge. This is Bloomberg News via mining.com. A global shortage of antimony, widely used in munitions, could worsen as the U.S. and Europe replenish stockpiles of bullets and bombs used in Ukraine, according to the company building one of the niche metal's few new sources of supplies. Larvado Resources is due to start a mine in Australia next year, offering a rare new stream of output from a Western nation in an antimony industry dominated by China and Russia. Prices of the metal are nearly 4 times higher than a year ago, after Beijing tightened exports of critical materials, triggering a scramble for supplies across high-tech and defense industries. I mean, my understanding is they outright banned the export of antimony last December. Antimony-lead alloys are used in bullet cores, explosives, and shrapnel weapons. Ukraine's Western military backers have drawn on aging inventory that will now need replaced, Larvado's managing director Ron Heeks said in an interview. Quote, "The antimony and lead from these munitions would normally be recycled into new weapons, but those have gone to the front line in Ukraine," end quote, Heeks said. Scrolling down, China, Russia, and Tajikistan produce about 87% of the world's mined antimony supply, according to Mandalay Resources, which operates a mine in Australia that counts for just 2% and where output is declining. And just a few headlines. China's central bank ups gold reserves for fourth straight month. This is Reuters via mining.com. So China continues to buy gold. And Venezuela's gold reserves dropped by 13% in 2024. This is Reuters via mining.com. Those are your news stories. Now let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The US 10-year bond is yielding 4.2%. That is 0.03% higher than last week. The UK 10-year gilt has jumped to 4.65%. That is up 0.13% from last week. The Italy 10-year bond has skyrocketed to 3.92%. That is up 0.39% from last week. The German 10-year Bund has also jumped dramatically to 2.86%. That is 0.39% higher than last week. And the Japanese 10-year bond is also higher at 1.51%. That is 0.09% higher than last week. So U.S. 10-year yields rising slightly, but dramatic moves out of Europe, especially with Germany and Italy, jumping almost 0.4% on the week, likely on talks of $800 billion in military investing in Europe. One imagines. Turning to precious metals, gold is trading at $2,913.50 per ounce. That is down $11 from last week. Silver is trading at $32.78 per ounce. That is 32 cents higher than last week. Platinum is trading at $960.40 per ounce. That is down $5 on the week. And palladium is trading at $933.50 per ounce. That is down $11 for the week. And turning to industrial metals, copper is trading at $4.62 per pound. That is 5 cents higher than last week. Iron ore is lower at $101.29 per metric ton. That is down $6 from last week. Aluminum is higher at $1.22 per pound. That is 3 cents higher than last week. Lead is trading at 93 cents per pound. That is 2 cents higher than last week. Nickel is trading at $7.45 per pound. That is 23 cents higher than last week. Tin is trading at $14.78 per pound. That is 58 cents higher than last week. Cobalt is trading at $11.90 per pound. That is $1.55 higher than last week. So cobalt continuing to climb. Lithium is trading at $10.34 per kilogram. That is 4 cents higher than last week. Uranium continues to fall at $63.65 per pound. That is $2 lower than last week. And zinc is unchanged at $1.29 per pound. Zooming out, everybody's calling it a wait-and-see market. The real standout here is cobalt, as we were learning at the top of the show, and really the bond market, with Italy and German bond yields jumping, and even the Japanese bond yield crossing 1.5%. Precious metals edge basically sideways. Copper looking impressive as it hits $4.62, approaching the $5 level. Otherwise, a bit of a sideways market. And those are your metal prices. Coming up, I'm very pleased to welcome back Jeffrey Christian, managing partner at CPM Group, to the Northern Miner podcast. It was a wonderful discussion on some of the big topics that are being discussed in the gold market, what was going on with the outflows of gold from London to New York, what is the deal with Fort Knox, and all of the discussion around that, as well as what's happening with other precious metals, including silver, platinum, and palladium. Is the value there? I asked Jeff. So I hope you enjoy the conversation, and I will see you on the other side. Joining us today, I'm very pleased to welcome back to the Northern Miner podcast, Jeffrey Christian, managing partner at CPM Group. Jeff, welcome to the show.
Adrian, it's always a pleasure to talk with you and catch up on stuff.
Well, it's wonderful to hear, Jeff, and as it is with you. And I mean, wow, look at everything that's happening in the gold market since we last spoke. It hasn't even been that long, and feels like a mountain of information has happened here. So before we get into kind of the more newsier items, I mean, you were just at PDAC in Toronto last week. What was your sense of the conference this year? I mean, you've been going for years.
I have been going for years. In fact, I found out that I probably qualify for some sort of old timer veterans discount. Uh, but I'll have to check that out. I thought it was an interesting PDAC this year because there seemed to be a much more realistic view of where we are as a mining industry this year that I haven't picked up on in the past. In the past, there's been waves of optimism about mining and metals prices and mining shares. There have been waves of pessimism. And this year, there was a slightly optimistic view, at least for the metals prices, but there was a more realistic view about how high metal prices could go and how some prices that have already risen sharply remain vulnerable to the downside. And also, I think a more realistic view about share prices and the extent to which investors might be interested in investing in the mining industry.
So, to a certain degree, the enthusiasm, one way or the other, was somewhat tempered.
Exactly. I have to add to that right away. The fact is that you're finding that sort of wait and see anxiety mentality across industries and around the world. With the advent of the Trump administration, there are a lot of people who are very much concerned about where things are going. And I think that that's includes the mining industry.
It makes sense. I mean, and wait and see, those three words seem to be really kind of captures to a certain degree, I guess, the zeitgeist, so to speak, of the financial markets in the last, I guess, 3 or 4 weeks. So finally, just on PDAC, I mean, gold's hovering near $3,000. The other metals, as you say, not quite as exciting from a financial perspective, not terrible either. Was there anything from the precious metals perspective that stood out to you?
Well, I think there's more optimism about gold and silver than there is about base metals right now. And again, there's a great deal of uncertainty. There are all kinds of weird rumors and misunderstandings that are circulating in the gold market and silver market. But I think that there was some, greater optimism about gold and silver prices. And then again, this whole thing about, okay, gold and silver prices are rising, but what's that mean for the equity market? Will investors come back into the gold and silver equity market? And what can the industry do to make that happen? You've heard for several years, look, gold and silver prices started rising in the second half of 2019. They've risen very sharply since that time, and the mining shares haven't done as well. And so 2020 through 2024, you heard this repeated pater noster, oh, the mining shares will catch up with the metals. And I didn't hear that so much this time. And insofar as I heard it, there was it was more of a question than a certainty in the voice of the people who were saying that. So I think that that's one of the big things that we saw vis-a-vis precious metals.
Very interesting. And I guess, this far into it, after it not working out so many times, you can understand the caution, which does, from a contrarian perspective, make you think perhaps they will have something to say at some point here. So bringing it over to the uncertainty and the wait and see, one of the things we saw in the last few weeks, which I think to a certain degree confused people, including myself, so I'm hoping you can provide some clarity to me, was this whole idea that gold was leaving London and it was being sent before the inauguration of President Trump. It was being sent to the USA in order to avoid a kind of tariff situation or something like this. What happened there? Are you able to kind of flesh it out for us?
I can flesh it out. And I will just say that the tariffs are a third level factor there that came along toward the end of what's really been going on. What's really been going on is a combination of two other factors that are much more interesting and much more important and have nothing to do with Comrade Trump. The first one is that you have a situation where the economic activity has been better in North America than it has been in Europe. And thus, the demand for precious metals and base metals for fabrication demand, jewelry and electronics in the case of gold, jewelry, electronics, solar panels, etc. in the case of silver, has been greater in North America. And investment demand has been greater for gold and silver in North America than it has been in Europe. That's contrary to what some marketing groups say. They were thinking that institutional investors in North America have not been buying gold and participating in the gold bull market, which is not true. They have been. So you had the stronger demand for gold and silver in North America from both investors and fabricators and users than you did in Europe. So there was a natural flow of metal there. But there's something else that I haven't heard anybody else talk about. Last year, the Polish central bank bought 2.9 million ounces of gold. So far this year, they've already bought another 100,000 ounces. And the Polish central bank and other central banks have been involved too from Eastern Europe. The Czech central bank, the Hungarian central bank, Turkey, if you want to call that, Serbia, other Eastern European countries have been buying gold. And the Polish central bank and possibly some of those others are saying, I want my gold as far away from Russia as possible, which was the Bundesbank's 80-year view as to what was going to go. So 2.9 million ounces of gold that the Polish central bank bought last year, and they said, we want that gold, 2.9 million ounces of good delivery gold in New York for delivery to the New York Federal Reserve Bank. We are going to store our gold as far away from Russia as possible. So 2.9 million ounces of additional demand in the New York market. And those two factors, stronger demand overall and 3 million ounces of Polish central bank buying for delivery in New York, those are the factors that caused a lot of gold to move to New York. Had nothing to do with tariffs, had nothing to do with Trump for the most part, right? Those came in toward the end. So you saw greater demand in New York. You saw gold and silver coming over into the U.S., into the New York market. And that widened the spread between London and New York. And that then increased the arbitrage opportunities. You had speculators and traders come in and they started trading that. And then you saw a broader public do that. And then Trump started talking about tariffs. People said, okay, I'm in a situation where I already have stronger demand in North America. I'm buying material wherever I can, including London and Switzerland and other countries in Europe, and shipping it to New York. And now this metal might be facing tariffs. So it behooves me to bring more metal in now and avoid future tariffs. And that's really what was going on.
Okay, very interesting. And I mean, when you do the math on that, that sounds like something close to, $8 or $9 billion that Poland was buying. I mean,
it's a lot of gold. 3 million ounces, or 2.9 million ounces to be exact, is a lot of gold. Yeah.
And where does Poland stack? We don't necessarily need specific numbers, but just generally speaking, like where does Poland generally placed as far as in the, for lack of a better term, pecking order of countries that hold gold in the world?
I don't know the exact number of ranking, but at the end of last year, they were up to 14 million ounces of gold. So, that's not all that great compared to 261 million ounces for the United States. But it's a significant amount of gold. India has 28 million ounces, for example. China has 73, 74 million ounces. Turkey has 20. So they're significant, but they're not one of the top 5, and they may not even be in the top 10 in terms of central banks.
And would you attribute a lot of the move we saw then in the last, say, 6 weeks to that buying? Like it's tempting to want to attribute it, or is that being oversimplistic?
Well, I think that the Polish central bank demand and the general greater demand in the United States and North America relative to Europe, those things have been going on throughout last year, and they were very important there. They clearly continued into this year because, again, you have traders and bullion banks that are involved in the gold market, and they're saying, let's be honest, the demand is in North America. It's not in Europe right now. There is demand in Europe, but it's not as strong and not as great as it is in the United States.
Okay, and just one little follow-up technical question on how this actually works. I mean, let's say Poland, I mean, because you've been in this business for so long and enjoy a pretty interesting position over there as managing partner at CPM Group. I mean, when a country wants to buy, 3 million ounces of gold, how does that work? Like, do you get Switzerland on the phone? Do you get London on the phone and you say, hey, we need to buy this much? Like, how do you do that?
Yeah, one of the great things about secret markets that I've always, it's been a problem for the gold and silver markets ever is the secrecy. And so you have these rumor mongers and say, well, Poland's buying or Switzerland's selling or China's buying or the Middle East is buying. And it's like, well, who's the Middle East? Who do I call to verify this? When a central bank wants to buy gold, it generally speaking has trading lines with a number of major market center banks, commercial banks, as well as reciprocal trading agreements with other central banks. And then it also has agreements with the Bank for International Settlements, which is in Switzerland. And so a typical central bank, understand, I mean, you have to remember that the gold that the Polish central bank has is probably a small part of its monetary reserves. It's also trading currencies all the time. So it has trading lines and trading agreements set up with commercial banks and trading companies, investment bank type companies and other central banks. A typical central bank will have a foreign exchange trading desk, which also handles bullion trades. And they make calls. They make calls to market makers and say, what's your gold price? And the market maker will say, right now I'm a buyer at $2,911 and I'm a seller at $2,912. There's usually like a 50-cent spread on the bid and ask. And then you know what that is. And then you know that other central banks know it too, because they're making the same calls and they're watching the same screens. So you have that price and you can choose your counterpart that you want to buy from at your discretion.
Interesting. And just very briefly, follow up on this. So are any central banks selling right now?
Well, it's interesting because the big seller in January was the Russian central bank. And in January, we actually saw net central bank sales of gold by the central banks as a group. Central banks as a group in January sold about 723,000 ounces on a total group basis. But if you break that down, the Russian central bank in January sold 1.6 million ounces. Mexico also sold some, but Mexico sold 10,000 ounces. So that was 10,000 ounces that probably was used to make official gold bullion coins. So those were the two sellers in January. If you look at last year, you probably had about 15 central banks that sold. So the Philippines and Kazakhstan were sellers. Singapore and Thailand, which had bought earlier a couple of years ago, were sellers. Germany sold a little bit, probably mostly coins. Cambodia sold some gold. It's a host of countries that, generally speaking, are relatively small sellers. Philippines was the big seller last year. On a typical year, like last year, you might have had about 12 or 15 central banks selling and about 20 or 22 central banks buying. So there is some flow. And much of the selling, as I said, it's relatively small, 10,000, 20,000 ounces. often representing coins, coin manufacturing and sales, official coins. But Russia was the big seller in January. I should say Russia has now released its data on February, and there were buyers. Russia has been financing its government and its war effort with gold because a lot of its foreign exchange assets have been frozen and probably won't come back. They'll be used for war reparations in any final settlement. So Russia has been living off of its gold reserves. So its gold purchases and sales have fluctuated month to month. I think the last month that it sold some in November, bought a little bit in December, sold, as I said, 1.6 million ounces in January, and probably bought a couple million ounces again in February, replenishing its reserves. It's been using gold, which it purchases in the domestic Russian market. Given the economic problems there, there's a pretty steady flow of gold being sold by individuals, consumers, investors who need money. And so there's a steady flow of gold being sold to refiners from investors as well as from mining companies.
It sounds like a fairly healthy market, the way you describe it. It sounds like if you want to buy some, even if you want to buy a lot, in the case of Poland, it doesn't sound like it's, it sounds like a fairly liquid market, which I guess stands to reason. I mean, it's gold, but I find it remarkable.
Yeah, I think because it's such a secret market, most people have no idea its depth and breadth. They don't really have an understanding of how many participants are involved in buying and selling, not just central banks, but jewelry companies, manufacturers, electronics companies, miners, refiners, smelters, investors, But the reality is that gold is a tier one monetary asset, and that status is predicated on a certain amount of liquidity and a certain amount of inventory that makes central banks, including the BIS and the International Monetary Fund, comfortable that there's sufficient liquidity in the gold market that a central bank that holds some of its monetary reserves in gold would be able to sell that gold should it want to.
Okay, excellent. So switching gears slightly, Fort Knox has come back into the conversation. Of course, it's almost sounds like an urban legend of sorts to a certain degree. Maybe it is to a certain degree in some respects. It's an iconic name. Now, we're getting Elon Musk, we're getting President Trump, discussing auditing Fort Knox. He recently put out a video saying, I was actually surprised to hear that, when Ron Paul was making an issue of auditing the gold reserves at Fort Knox, that in fact this had actually already happened. But then you see other information which says, it hasn't been audited since the 1950s. And what I remember in our conversations, Jeff, just to kind of finalize the point, is Fort Knox even the main place where they hold gold in the United States?
Yeah, it is. A couple things. Yeah, Fort Knox is the largest depository. It has about 147 million ounces of gold that belongs to the United States. The Mint has a facility, a depository, and actually coin manufacturing facility at West Point, New York. That has about 54 million ounces, maybe a little bit more than that, of gold. It might be about 64. The U.S. Treasury owns 261 million ounces in total. So if you put those two together, that's more than 200 million ounces. And then there's gold spread around a couple other mint depositories and a little bit of gold held at a couple of the Federal Reserve banks. But Fort Knox is the main center for storing what they call deep storage gold.
Okay, excellent. And have you seen then Rand Paul, the son of Ron Paul, come out and say, you're seeing different Congress people come out and say, I wanted to see the gold reserves, but they wouldn't let me. So what is your assessment of Fort Knox and the gold reserves? What is your basically, take on this?
Let's back up. All of the stuff that you're hearing about the gold's not there, or the gold has been leased out, or the gold has been hypothecated is totally false. It's total nonsense. as you said, the gold is audited on an annual basis by KPMG. And those audits are published at the USTreasury.gov and at the Federal Reserve Board's website. You can download those. And I'll explain what the audit is, and I'll explain why. I'll just call them Congress people because I can't think of a socially appropriate thing to call Rand Paul. There's reasons why they don't see the bars, and I'll explain that in a second. So there are annual audits by KPMG, independent audits, to make sure that the gold is there. And then there was a deep dive where they measured, inspected every bar, thousands of bars in every depository, weighed them, inspected them, took representative samples, had independent assays conducted on those samples, and checked the bars against the bar lists that the Treasury has. And so there's been a deep audit on a bar by bar basis. And all these people who say they should do that because they haven't done it through the 50s are either speaking from a position of ignorance or they're simply lying. Trump knows that. Musk may or may not know it. He has mental issues, so you never know what what's in his head. Ron Paul, when he did his hearing in 2011, said, gee, I didn't know there were audits. No one ever told me until I was preparing for this 2011 hearing. At that point, they gave me the bar list, and the assay results from the assay samples that they took. So he knows it, even though a couple of weeks ago he was denying it. He said, well, I saw that list, but I'm not sure that it's really there. You have to understand, Trump and Musk are trying to create an environment in the United States of tremendous suspicion and anger on the part of voters toward a secret government that does not exist. And anything and everything they can say, from vaccines to genetically modified grains to Chinese spies in various governments to, the gold in Fort Knox probably isn't there. And even if it is there, it doesn't mean that it's ours because it might have been secretly hypothecated. Anything they can do to create suspicion and anger toward the government, they will do because they are trying to subvert the U.S. government. There's no doubt about it. I mean, basically, Trump has said that. That's what he's trying to do. He's trying to subvert the government and get it to the point where people say, we don't need to vote for anybody else. You just stay there and you can be king or whatever you want to call yourself. So that's what's going on there. Now, let's describe what those audits and assays are. And in order to understand that and what's going on with that metal, you have to understand how it's stored. Those bars are stored in sealed drums, 50-gallon drums or 42-gallon barrels. And the bars go in, a list of the bars in that drum is made. The drum is sealed and the seal is signed. So if you look at a drum and the signature is broken, that means that drum has been opened, right? The sealed drums are then put in individual vaults within Fort Knox and within West Point. So there are different vaults within the depository. The vaults are then sealed and signed. And if the signature hasn't been broken, the seal hasn't been broken. And you know that no one's been in that vault. So when a putz like Rand Paul says, I want to go see the gold, say, well, here's the problem. If I open that vault, every bar in that vault has to be re-audited. We haven't opened some of these vaults in a long time since the deep assay was done. So therefore, we don't want to do that. There are some bars that are not in sealed vaults that you can show dignitaries or indignitaries, but it's there. So people say, well, yeah, it's in a sealed vault, but you don't know what's in that sealed vault. Well, you do because there's a list. And if you trust people and you trust the U.S. Treasury, it's there. Now, there are people who say, well, how can you trust the U.S. Treasury? Well, There are very good reasons. And quite frankly, I trust the US Treasury far more than I trust Elon Musk or Donald Trump or anybody who talks to them, right? So it's there. There's no question about it. The only people who question it are paranoid and suspicious, or they're feeding that suspicion and paranoia. When a entity, whether it's a central bank or a government or a private corporation, leases or hypothecates its gold or silver, part of the terms and conditions is that that metal has to be in the possession and control of a third party. Venezuela found this out when they repatriated their gold, and then they tried to lease it out, first to Goldman Sachs, then to Citibank. And they found, okay, if you want to lease that gold out because you're short on foreign exchange, you have to move it back out of Venezuela. So they did move it. They moved it to Uganda, where they had it melted down, recast into new bars, and then they sold it, and the Maduro and Chavez crowd kept the money, right? But if you are hypothecating metal, the first rule of anybody who's going to lend you money against that metal is that metal has to be in the control of a third party. So the idea that the US government says, hey, we're basically bankrupt, so will you lease 261 million ounces of gold? First off, it's preposterous, because if you lease 261 million ounces of gold, the price of gold would be $10 an ounce, because no one's going to lease gold and then sit on it. They're going to re-hypothecate it, lend it out to their customers. So you would have so much leased gold that it would be low. And if the US government did say, oh, we're going bankrupt, so we want to lease that gold out secretly, the first thing that somebody with money would say is, okay, you put that metal someplace else, and then we'll talk about me borrowing it from you and paying you cash on that lease. So the idea of the gold being there but leased out is also equally nonsensical.
Very interesting. And have you been to Fort Knox? It sounds like
Yeah.
you may have been.
Yes, I've been. I think I've probably been to most, if not all, of the depositories that the Treasury and the Fed have, as well as depositories that other central banks have.
Okay, that is fascinating. Okay, so all to say this Fort Knox thing is like, when you hear this story, it's just, for you, this is like some, news media narrative that's basically spun out of control, and basically the real kind of substance of it is kind of non-existent, so to speak, in terms of the story itself.
The story is that, there are always people like Eric Sprott who will lie about stuff because they're trying to scare people into buying gold. But right now we have people at the highest level of the US government trying to create this view of suspicion toward every aspect of the US government. Yeah, the Board of Education wants to teach people to be gay. Health and Human Services wants to, give you vaccines with microchips buried in it. And the Treasury sold its gold a long time ago. It's just part of this. Let's create a group of paranoid, suspicious people who will support us blindly because they don't know how to get good information off the internet.
Okay, so just bringing it then as we start to wrap up here, Jeff, and thank you for your time so far. I want to bring it back to silver, platinum, and palladium, because it seems like gold's had quite a run here. Silver, they all kind of look attractive to me with my kind of layman's view over here. As far as like what might perform, from what might outperform, say, against gold. Didn't you release a silver announcement of some kind at PDAC?
Yeah, we did a Facts and Fantasies YouTube video the week before PDAC, gave a speech at PDAC at a breakfast hosted by a mining company. And we will do a little booklet called Silver Truths. It's actually under production right now. We normally would have finished it off by now, but we've been really busy with the markets being as they are. And so we hope to get that done and sent out in the next 3 days. And that'll come out. The full yearbook will come out in May. That's like a 250-page book with all kinds of data in it.
Okay, excellent. And I'd love to have you on for that. Now, in terms of silver, platinum, and palladium, I mean, they're all different metals, of course, but does it resonate at all the way I'm describing it, that perhaps because they are not at record highs, that perhaps there's an opportunity for outperformance there? Or how do you respond to that statement?
We are telling our clients that we think gold and silver prices will rise and rise significantly. Whether, I'm not quite sure that we have silver outperforming. I think we have gold outperforming silver over the next 2 years in terms of price appreciation. But we have gold and silver rising because at the end of the day, they're financial assets that investors buy because they're worried about the state of the world economically or politically, or they're worried about their own exposure to economic and political problems and issues. So we're bullish on gold and silver. We're probably more bullish on gold than we are on silver. And then we're actually pretty bearish on platinum and palladium because they primarily are industrial metals, the major use of which is auto catalytic converters. And the catalysts are facing a lot of headwinds. On a long-term basis, you've already seen about 14% of the market for petroleum-powered light-duty vehicles disappear. And that's a trend that's continuing on a global basis, where people are buying electric vehicles that don't use platinum and palladium to clean up petroleum exhaust. In addition to that, we think that we're probably heading into a global recession at some point over the next couple of years. And in the run-up to a recession, you're already seeing consumers pull back on buying new cars. And once you get into a recession, and if you lay off a whole bunch of people, which is happening around the world now, they don't buy new cars usually. So we expect a cyclical decline in automotive demand for platinum and palladium, as well as a longer-term secular decline due to the shift away from petroleum-powered vehicles. And so we're not necessarily positive on platinum and palladium. We wouldn't advise long-term investors to buy them. Although that said, we think there will be periods of time where there will be shortages of metal in the market that could lead to significant price increases for a few years. But on a long-term basis, we're far less optimistic about platinum and palladium than we are about gold and silver.
And so is there a crisis in silver then, Jeff, finally?
I think the crisis is one of massive amount of disinformation being spread around the world about silver. There's plenty of silver around, both in above ground refined inventories and in yet to be mined reserves and resources in the ground. We have seen now for about 2 years pretty heavy resales of silver from investors. We've actually seen a big increase in net investment demand from about 50 million ounces in 2023 to about 72, 73 million ounces last year on a net basis. But it would have been even higher had there not been tens of millions of ounces of silver being sold by investors to take advantage of the higher prices that we saw over those last 2 years.
Jeffrey Christian, managing partner at CPM Group, thank you for the fascinating discussion on everything relating to the precious metals here on this week's Northern Miner podcast. Thank you once again to Alamos Gold for sponsoring this week's episode of the Northern Miner Podcast. You can find out more at alamosgold.com. And thank you also to Jeffrey Christian for appearing on this week's episode. And thank you, dear listener, for continuing to support this program. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.